Hello everyone, my name is Vedant and welcome to Markets Daily, a daily stock market insights and analysis podcast by Bajaj Broking. Our mission to bring our listeners the best daily financial news and advice that you will need before the markets open so that you can make the best decisions when it comes to improving your finances. Along with this program, if you require any more information, please do visit www.bajajbroking.in. With that said, let's get into today's episode. Starting with some of the top news headlines for Indian business today, Aditya Birla Fashion has decided to demerge Madura Fashion Business into a separate listed entity. On the government front, India's defense exports have reached a record 21,083 crore rupees in the financial year for 2023-24. GST collections for March are also up 11.5% year-on-year, standing at 1.78 lakh crore rupees, the second highest collection ever. And moving back into the private sector for a second, Bharat Dynamics financial year 2024 turnover stands at 2,350 crore rupees versus the 2,489.4 crore rupees year-on-year. As of April 1st, 2024, the company's order book stands at 19,468 crore rupees. And lastly, Tata Power's arm, TP Saurya Limited, has commissioned a 200 megawatt solar project in Bikaner in Rajasthan. Oh, and I almost forgot that little bit extra of the Indian news, and that is the FII and DII sales data. The FII's net sell stands at 522.30 crore rupees, while the DII's net buy stands at 1,208.42 crore rupees in equities yesterday. Moving on to today's global market insights, the S&P 500 fell 0.3%, while the Nasdaq Composite gained 0.1%, and the Dow Jones Industrial Average was down 240 points or 0.6%. Overall, a mixed day on Wall Street. Traders will now be looking for the job openings and labor turnover survey from February, which will be released on Tuesday US time. Durable orders for February are also on deck Tuesday morning US time. The main event this week, though, will be the big payrolls report for March, which we mentioned last episode, that is due on Friday, again US time. Asia-Pacific markets were mixed on Tuesday as investors assessed economic data from South Korea and Australia. Chinese shares led a rally around most of Asia overnight amid a broadly optimistic global economic backdrop. While the dollar rose after data showed the US manufacturing sector grew in March for the first time since September 2022. South Korea's March inflation rate held steady at 3.1% in line with expectations, and the South Korea's Kospi was down 0.34% and the Kosdaq slid 1.11% after the inflation reading. In Australia, the S&P/ASX 200 climbed 0.12% to fresh all-time highs, and Japan's Nikkei 225 rebounded slightly to gain 0.25%, while the broad-based Topix was up 0.19%. With that, we have exhausted all the news and insights happening outside India, so let's move into the country to talk about the Indian indices and markets. Starting with the GIFT Nifty suggesting a negative opening for the Indian market amid weak global cues. Post a soft opening, we expect the Nifty spot to consolidate in a range of 22,250 to 22,500 levels. Dips towards the support area of 22,270 to 22,300 can be used as a buying opportunity with a stop loss below 22,220 levels from an intraday perspective. For the Nifty previous day outlook, benchmark indices started the session on a positive note, thereafter consolidated at a higher level and closed the session up by 0.7%. The Nifty opened the gap up and formed an all-time high of 22,529 levels in the opening trade. However, marginal profit booking at higher levels saw the index give up some of its intraday gains and close the session at 22,462 levels, still an uptick of 0.6% though. The Bank Nifty also traded with positive bias and closed the session at 47,578 levels, up by 1%. What this looks like on the daily time scale, the index has formed a high wave candle with a higher high and higher low, signaling continuation of the positive bias. In the process, the index retraced its 8-session decline in just 7 sessions, highlighting strength and continuation of the up move. Going ahead, we expect the index to maintain a positive bias and head higher towards the 22,700 to 22,800 levels range in the coming weeks, being the 138.2% external retracement of the recent breather. Large cap stocks continue to outperform on expected lines, while mid and small cap stocks are likely to consolidate. The short-term support for the Nifty is placed around the 21,700 to 21,800 level range, being the confluence of the 50 days EMA and the low of March 2024 and the 61.8% retracement of the previous major up move. For the intraday levels, the Nifty's intraday resistance is situated at 22,490, followed by 22,550 levels. Conversely, downside support is located at 22,350, followed by 22,280 levels. For the Bank Nifty, intraday resistance is positioned at 47,650, followed by 47,850 levels, while downside support is found at 47,270, followed by 47,100 levels. And lastly, for the Fin Nifty, intraday resistance is positioned at 21,210, followed by 21,300 levels, while downside support is found at 21,050, followed by 20,970 levels. And moving on to the last little bit about the Indian indices, it is the derivative data analysis for today. For the Nifty, the highest put open interest addition has been placed at the 22,300 level, which is likely to act as support for the Nifty. The shifting of put writers from 22,000 to 22,300 levels suggests a positive data point. On the other hand, major call open interest addition has been positioned at the 22,500 level, which will act as immediate resistance for the day. If the price surpasses and sustains above 22,500 levels, short covering could be likely. According to option chain analysis, call unwinding and put writing below the 22,300 level indicate multiple supports for the Nifty and are likely to restrict the downside move. The range between 22,300 and 22,500 levels is likely to be decisive for further directional movement. The put-call ratio has declined by 0.11 and now stands at 0.107. For the Bank Nifty, the major put open interest addition has been observed at the 47,000 level, while the immediate put open interest addition has been placed at the 47,500 level, which is likely to act as support. If the price breaches and holds below 47,500 levels, a corrective bias could be possible. On the other hand, the highest call open interest addition has been noticed at the 48,000 level, whereas the immediate call open interest is placed at the 47,500 level. If the price holds above 47,500 levels, it may trigger short covering towards the 48,000 level. The accumulation of call as well as put open interest addition at the single strike of 47,500 suggests a straddle formation and is likely to act as a deciding level. According to option chain analysis, the immediate range for the Bank Nifty is likely to be between 47,000 and 48,000 levels and is likely to consolidate within the range before any further directional move. For the Fin Nifty, the accumulation of call as well as put open interest addition at the single strike of the 21,200 level suggests a deciding level and a straddle formation. Across the strikes above the 21,200 level, call writers seem to be active, with the highest call open interest addition positioned at 21,700 levels. Meanwhile, the major put open interest addition is placed at the 21,000 level, which indicates an immediate support level. According to the option chain, Fin Nifty is likely to consolidate within a range of 21,000 to 21,200 levels for this expiry. And with that, we have exhausted all the financial news and insights about the equities market, international and Indian, so it is time for the other asset classes. Oil prices stay near 5-month highs as markets expect tighter supplies due to OPEC plus cuts, and after attacks on Russian refineries with Chinese manufacturing data supporting a stronger demand outlook. Brent rose 42 cents to settle at $87.42 a barrel, while US crude settled up 54 cents to settle at $83.71 a barrel. The dollar index, a measure of the US currency against 6 major peers, rose 0.47% to close at 104.77 basis points. Gold paired gains as the dollar and bond yields rose. Spot gold hit an all-time high of $2,265.49 an ounce in valuation earlier in the session, and US gold futures settled 0.9% higher at $2,236.50 an ounce in valuation. US Treasury yields rose as the stronger than expected manufacturing data raised doubts on whether the Fed can deliver on the 3 interest rate cuts outlined in its forecast at its last policy meeting. The yield on 2-year Treasury notes, which reflects interest rate expectations, rose 9.2 basis points to 4.712%. The 10-year yield rose 12.3 basis points to 4.317% after earlier touching a 2-week high of 4.337%. And with that, we have reached the end of today's episode. We need to start knuckling down and getting ready for the markets opening later today. As always, I hope you all have gotten something meaningful out of today's program. And as mentioned before, for more information, please do visit www.bajajbroking.in. This podcast was made possible by the good people of Bajaj Broking, and we can't wait to bring more financial news and analysis to you when we return tomorrow morning. Cheers, everyone.
Investments in the securities market are subject to market risk. Read all related documents carefully before investing.